We're 2.5 hours into trading. It is Monday, May 17th. Hello, traders. Let's take a look at last Friday's pick. Then let's see what we can find for today. PBR. Love that breakout above the 100-day moving average. You can see Friday the stock closed near its high. Today it is up again. This is about where the video came out. So you can see that it's up about 20 cents today, but I believe the stock's got a chance to get to 10.25. That would be my target. It will fill in some of the gap on the daily chart right here. So it's still got some pretty decent upside. You can swing trade that one. Last night, I posted a video to YouTube. I highlighted letter C, Citigroup. Loved that relative strength. Orange line above zero. Fantastic relative strength. This is our edge. This is what we trade every day. This is what I preach. Gray line is the S&P 500. Market down, down, down. Stock up, up, up. Buyers can't get enough. When the market's selling off, 75% of these stocks sell off. When they don't, it tells you that the demand for the shares is super, super high. Look at this stock making a new all-time high. That is what I love. And I had suggested selling the June 11th 72.50, 71.50 bullish put spread for a 20-cent credit. Why in the heck do you keep selling these bullish put spreads, Pete? What the heck? If you like the stock, why don't you just buy some calls? Market first, market first, market first. Let's spend some time on the market. You can see that the market's pulling back today. Got this little gap in here. You've got multiple support right here. Tails under body. Hey, this looks like a good entry point. For buyers, yes, there are many people nibbling here. What you're going to eventually see today is you'll see a little bit of a pop, and then this is going to fail. You'll see a long red candle through it, and that is going to flush out all the buyers that are lining up right here. And this is where most people would buy. I'm supposed to get into a trade and keep my stops very, very tight and have nice upside. So this is a good entry point because if I buy right here, then I can have my stop right here and I can take a tiny little loss. But if the market bounces, then I'll have really nice upside, maybe even to the high from Friday. That's the mentality that everyone has. Unfortunately, programmers and institutional traders know exactly what you're thinking. That's what everybody thinks. So what they'll do is they'll give you a nice little head fake here, and it'll make you feel all warm and gushy, and you'll think, oh, this is going to be such a nice trade. And then you'll get a long red bar closing on its low through that support level, and you'll be stopped out for your small loss. Then what happens after that will tell us what happens the rest of the day. I believe that we're going to see follow through selling. We could even fill this gap right in here based on the high from Thursday and the open from Friday. Down here, we're probably going to test that close sometime this week, and that would put us down to about the 410.50 level. That is a minor support level. I don't see this market as taking off. So let me just confirm what I believe is going to happen today. I think we're going to get a little bit of a bounce, and then we're going to get a sell-off. And we may see follow-through selling. That would be my guess. If you get a long red candle that immediately retraces, then that means that they were just hunting for those stops. They triggered them, and that the market has found support and it'll continue to rally. I would say about maybe 35% of the time, that's what you see. But most of the time, when you get those big drops to a new low of the day, they take out the stops. You get follow through selling, especially when you have this type of price action during most of the day. If you had a nice range, both extremes visited often during the course of the day, then those little poke throughs usually reverse right away. But this is some pretty persistent selling. Let's take a look at the D1 chart. Why do I spend so much time talking about the market? Because it drives everything. It drives all of our decision making. If you get the market wrong, there's a 75% chance that you're going to lose money on the trade. So you better focus on the market. This is the most critical part of your trading. we can see that we've had these dips before and then boom, right back at it. Another dip, boom. Look at that buying. Tiny dip, big buying. Why is this time different? Well, if you recall back in here, we had earnings season coming up. We had stimulus bill going to be passed. Then we had stimulus checks in hand. Then we had gangbuster earnings season approaching. That was all in here. And the market was looking at the coronavirus cases declining and how the pent up demand was going to drive this robust economic recovery. That was the hope back in here. And that is what fueled an 8% rally in a month. Now we get all the news comes out. People have their stimulus checks. We've got fantastic economic releases. We've got unbelievable earnings announcements. We have a dovish FOMC. Every shred of fantastic news came out right here, and we didn't break out. That is a warning sign. And then all of a sudden we get this crackdown here. Okay, there is some profit taking. Now, this breakdown right here happened on something new that's kind of developing. We've seen interest rates inching higher, and that inflation might be a future concern. Well, it's a very real concern. And now we're starting to see that in the prices of lumber, copper, iron ore, all the grains, gold, oil, all the commodities are moving higher, and it's mainly because of supply disruptions. Ideally, we would have seen that because of pent up demand. The demand is so big that it's driving prices higher. That's not currently what's happening. So there are some speed bumps out there. You also have to ask yourself, why the heck is China's market in bear market territory? It's down 20% from the high. China has an 8-month head start on everybody. They are the global growth engine. When the global economic recovery starts, it's going to start in China. And you're going to see gangbuster numbers out of them. Well, then why is their market down 20%? They announced retail sales today. They were up 17.7% year over year in the month of April. That sounds fantastic, but remember they were in the middle of the coronavirus a year ago. Expectations were for a 24.9% increase in retail sales. That is materially lower than expectations. So I think that's going to be a concern. I think that the coronavirus cases spreading globally is going to be a concern, is going to weigh on global economic activity. Yes, Europe is starting to finally reopen. That is a positive. So I've given you some things to think about right now. I am not super bearish. I feel that the market is going to be in a trading range between SPY 400 and SPY 420 for at least the next couple of months. And we're going to chop back and forth in that range. Volume will probably be pretty light. If you are a swing trader, you need to be super patient and you need to wait for these dips. If you don't get one, you don't trade. When you do get the dip, you sell out of the money bullish put spreads. Again, why? Because we want to give ourselves plenty of cushion because the market's going to be choppy. We also want to take advantage of accelerated time premium decay. We'll have both of those working in our favor. That's why I favor that strategy. That's why I'm not buying calls on Citigroup. There is no market tailwind to fuel the stock. I don't see a catalyst coming in the next 2 months that's going to force this market breakout. I feel that these gains need to be digested. As companies have another quarter of profits under their belt, the market bid can start to strengthen. Valuations will get a little bit more in line, and everybody will be able to see exactly how hot the inflation is. I didn't even mention hourly wages. They were up 0.7% in the last unemployment report. That is hot. Wages are the largest input cost for employers, so prices are moving higher. Inflation is not one of those things that's just going to go away quietly either. This is going to take many months to resolve, and to gauge. And as long as it persists, you're going to see profit taking near the all-time high. So let's take a look. Let's see if we can find a long and a short. I am favoring the short side today, so we'll put up that 5-minute chart. And you can see, like I said, look for a little bounce in here and test, little bounce, and then one of those tests is going to be a long red candle closing on its low and closing on the low of the day. And that is going to trigger these sell stops. I can feel it. I know this is going to happen. So we'll take a look at some stocks and see what we've got. We'll go into heavy selling and take a look to see if we can find some stocks in here that we like. LOW, really nice looking chart. You can see horizontal support 1, 2, 3, breached to the downside. You've got selling off of that high. You've got an inverted, a bearish candle right there. I like it, but the 50-day moving average is standing in our way. If the stock can take out the 50-day moving average, then I like it the rest of the day to continue to sell off. I'm going to go into its competitor, HD, because it offers a better chart. You can see horizontal support right there, and now we've breached it. I believe that Home Depot has a nicer path to that 50-day moving average and more upside potential if you're short the stock. Put up the 5-minute chart, you can see the steady selling. Pete, are you suggesting that we buy puts and hold them overnight? No, I am not suggesting that at all. When you have a 12-month bull market, you do not pick market tops. That's a great way to lose a lot of money in a big hurry because the snapback rallies, whoosh, are violent and they're nonstop. Can go back to the rally that we had on Thursday as well. This is a great way to lose a lot of money. Day trading from the short side, you bet. But until the market has a massive crackdown below that 100-day moving average and it closes below the 100-day moving average for at least a few days, every dip is a buying opportunity. Only when we get major technical breakdowns, only when we stay below those technical support levels for a few days and confirm it, then we can consider taking overnight short positions, and not until then. So again, hate to sound forceful about it, but I get that question all the time. You need to be day trading from the short side. TSM, nice little bounce, too big of a bounce for me. Comes into the gap right here. Yes, there's some steady selling pressure here, but the market has also been drifting lower and lower and lower. So let's make sure that we get back to the beginning of the chart so that we can track what the market is doing through the corner of our eye. So TSM, okay. CMCSA, look at that nice tight trading pattern. This has come up on another one of our searches. Let's take a look at that daily chart. And there you can see the 50-day moving average is in our way. If you're short that stock, you got to be taking profits here, and you got to wait to see if it can penetrate that support level. If it can, then it's going to continue to decline. Look at that drop right there. This is a nice, strong stock with a big drop. Home Depot and Lowe's had a similar chart. This is a home builder. Materials expenses are going up. They're probably holding off on building some of their new homes until some of those expenses come back in line. Home Depot, people holding off on their home improvements until some of those prices come back in line. So out of the stocks so far, take a look at a couple more. This is a nice little breakdown right in here. There's horizontal support below the 100-day moving average. Going to the 5-minute chart. HIMX under steady pressure today, relative weakness. That looks like a pretty decent little short as well. Let's take a look and see what else is up here. I'm going to go into a search, and I'm going to do the same thing on our counterpart. Ice cold is a search I'm going to look at. SQ is on it. Very, very nice steady selling pressure. Personally, I like all support levels to be out of the way. And you can see this support level coming into play from last Thursday's low. So yes, it's got some room to get down there. I love this steady selling pressure, but you got to be willing to take profits there because I think it finds support down there. I'm going to go into The counterpart, which is red hot, this is a great day trading search. We've been on these stocks early today. Look at that. Nice upward momentum. I highlighted this in the chat room early. It was back in here. I said, look at STX. It's starting to get back on track. Nice entry point. WDC. Also very, very strong price action. UPST just coming on. It's a little bit choppy. That's kind of nice right in there. Let's go into the daily chart. I always like to look at a daily chart before I day trade a stock. I have to like it on a swing basis before I'll day trade it. You still have this downward sloping trend line right here. That's in the way. You got the 50-day moving average. It's barely been able to get through. So this would not be one of my favorite candidates. Go into heavy buying, see what's popping in here. GME, it's also going to be on our short squeeze list. You can see STX, WDC, RBLX has been a nice strong stock. Gold, what a breakout. Look at that breakout through the 200-day moving average. A lot of these gold stocks have also been super hot. As you look down the list, you'll see NUE, a lot of commodity stocks in here. Basic materials have been super strong. TLRY, it's a short squeeze stock. CLF. There's a stock that was in yesterday's search that I showed, and it was BCRX. It's been coming up on our other searches. I really like this one, and I like that upward sloping trend line here. I like the fact that it's above the 50-day moving average. It's been able to find support there. It's been strong relative to the market. Orange line above zero. I like selling the June $12 puts and buying the $11 puts for a 20-cent credit. That is a bullish put spread. I feel that this stock is flirting with a new all-time high. I feel it's going to make a new all-time high. So I love doing that bullish put spread. It's a choppy stock though. If you day trade this, you've got to wait for dips just like this one, and then you have to wait for market strength. Once you get this market support and a little bit of a lift off, then you can buy this stock. If the bottom falls out and you get that long red candle, this stock is going to hold up better than others because it has relative strength. So you need to exit the trade, wait to see if that was just to shake out short or buyers, shake out the sell stops, and then the market recovers. If yes, then you can get back in on a stock like this. If no, and you see follow through to that red bar, which I suspect will happen, then you want to make sure that you're focusing only on the short side. So look for a little bit of selling later today. I don't believe that the market has a catalyst like it had here, here, and here to make that kind of a rally off of this move. I believe that this is going to fall back and test the low from last week. Could happen as early as this week. And if that support fails, we may have a path to test that 100-day moving average, especially if inflation is hot. I consider this to be a fairly low probability trading environment. Trading volumes have been very, very light. When you had this rally right in here, it was coming on extraordinarily light volume. And if we stay in a trading range between 420 and 400, you're going to see the volume drop off even more, especially as we get into next week, given that we've got a holiday coming up. Holidays don't just take out a trading day, they take about another 2 or 3 days along with them as things really start to quiet down. So make sure that you trim your size, trim your trade count, be conservative, keep your powder dry, don't piss your capital away in a lackluster, low probability trading environment. That's all I've got for you today. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.